Well, a very good evening to all our mentorship traders. 4th of June, 2021, 9 p.m. Indian Standard Time, a Friday evening. First and foremost, apologies for not being able to conduct our last Friday's session. Some simple personal issues. Nevertheless, the market did fare pretty well. So let's quickly take a look at how the markets played out, the sectors, and what can we expect going forward. So Nifty first, of course, we have a new life high and the rally continues for the third consecutive week, 15,700. Congratulations, we are back to an emphatic uptrend bull market across all time frames. Having said that, a closer look at the smaller time frames, which I had walked out post market today. So from a very micro perspective, from a very short-term perspective, what we have is a very strong support zone here at 15,630, 600. So you can say 15,600, 650 is the kind of levels. Highs have been holding exceptionally well in the recent two-day sell-off, consolidation rather, because we have two small spinning tops on the daily chart. I'll come to the daily chart a little later. On the upside, this index will pick up some momentum above 15,700, 720, 30 kind of levels. We are in an uncharted territory, so upsides can extend further up to any levels. It's on the downside that we have to be a little careful about. And a break below 15,600, sustained close below 15,600 early next week can show us the possibility of an extended consolidation or price-wise correction. Let me take you to the daily chart. I'll quickly get rid of these arrows so that it's a little clearer for us. So what we have is a possibility of an exhaustion gap up here. This is Thursday, this is Friday, two small bodied candlestick, narrow range, spinning top kind of a behavior, almost like a doji. So is this an exhaustion gap? Possibility is there, because definitely it's not a runaway gap as of now. The markets did not run away. In fact, it's been running away for quite some time. We can very easily see that. So the chances of an exhaustion gap seems to be a little more higher. But for that, it needs to break below Thursday's low, 15,635. So essentially, we're looking at 15,600. So use the 15,600 level as an important one on the downside. And if the index slips below this, hold yourself back. You can very clearly see this on this chart of Nifty. See where the prices are and see in relation to its medium and long term, or if I call the 5-day period, this is a 5-day, this is a 13, this is 34 exponential moving averages. Essentially what I'm saying is it's a little far off from the moving averages. Don't you think so? So the trend has been pretty good, and the time is there that either price comes down close to the moving averages or price consolidates and the moving averages goes close to the price. So either a consolidation or a correction, the possibility of it is there, is very high, and use 630, 600 as the level. Below that, stay a little quiet, wait for signs of supports to kick in, and supports from a slightly longer perspective rather than 600 will be down here close to 300, 350 if we have a correction. So I think it is important, it is smart to be a little careful the week ahead. We've been calling for a breakout, we've been calling for a new life high, and so far so good. But now I think the call should be more in terms of staying on the sidelines a little bit, playing it a little safer, playing it a little quieter. I would like to bring your attention to the 125-minute time frame over here, and if I turn it into a line chart, what makes me a little worried is, of course, you will be clearly seeing these kind of divergences, but I have an intermediate divergence, and within that I have an immediate divergence. Now these kind of plays generally suggest that a quick short-term dip is very much likely. we'll see to this, but strategically we should be careful. That's Nifty holding strong to its grounds. The underlying trend is of course very, very strong. Let's take a look at the bank Nifty. We have kind of an engulfing, can't call it engulfing per se, but it is an outside bar, and of course it has got some decent amount of divergences kicking in down there. 36,000 is what we've been asking for, we've been looking for on the other hand. So 35,960, no complaints. The index has done very well, it's turned on a dime from this level, and a short-term correction or a consolidation is good. So I've been talking about consolidation, correction, these two words. If it's more like a consolidation, if price stays range bound, then this rally is going to extend further up. Definitely. Correction, it's healthy, but then the next leg up will take a little bit of time. But nevertheless, stay bullish. Real estate played an exceptional role this week. We've seen a pretty good move, close to 7% move from the real estate. Mid and small caps are still doing exceptionally good. It's been a stock specific market, and I think it's going to stay like a stock specific market, 2-3% up this week. Auto, good pickup, little bit of mixed up behavior. Auto ancillary stocks have been doing good. Keep a closer eye on Mahindra because that stock, if you want to take a look, we can quickly go there within the auto. It's Mahindra. I've marked it green because I'm keeping a very, very closer look whether this 1, 2, 3, 4, see this small 4 candlesticks, smaller candlesticks, this kind of consolidation, whether it gives us a breakout or not. So I'm keeping a closer eye on M&M. Others have moved pretty well. TVS Motor is also on the verge of bouncing back from its supports. Hero MotoCo also is one stock which did pretty good into today's trade, also up 1%. So overall, auto seems to be a space where it's trying to bounce back. Financials, of course, supportive. There is no doubt about it. We have the Fin Nifty over here. IT and metals. Now, IT is on the verge of a fresh breakout. We can see that the entire Nifty IT had been range bound for quite some time, and it's at all-time highs. If we very likely get a breakout from this level, then IT stocks like TCS, Tech Mahindra, HCL can perform. And I have my eyes on the metals also. We all know how exceptional strong uptrend the sector has been recently. Overall, a short-term correction like this that we have gone through is now on the verge of a reversal. So metals also is one space. Jindal Steel, SAIL are the ones which you should definitely keep a closer eye. Drags, FMCG, well, this is primarily because of ITC that it's failing to perform. That large cap stocks, last week we were looking quite positive towards that, gave a move but then fizzled down completely. And pharma, we can clearly see this is a weekly chart, and look for the last 4 weeks how the pharmaceutical index has been completely flat. Uptrend, yes, but it's consolidating, so we may not get the kind of support. Energy was primarily led by Reliance, and of course beautiful move, no complaints, but Reliance is definitely tired, and it will consolidate or correct before its next move. So overall, I feel that there is not much candidate amongst the top 15 to 20 stocks of the Nifty 50 which can carry forward at the rate at which the Nifty has gained over the last 3 weeks. A short-term correction, the signs of that is very much there on the charts. So the possibility of a consolidation correction is very much there. It's ripe, and if it happens, it will be healthy. It will create headrooms. If not, I think it will be stock specific market, like we saw how Reliance went up 6% and supported the index really well. We can have those kind of behavior. IT, possible at its all-time highs. Stocks like TCS can definitely perform. Stay strategically bullish. Be a little careful. Don't go overboard. Keep your positions little on the lesser side. Be a little more agile. And I think we will continue to stay in a stock specific bullish market. That's what the overall call is. 15,600 the first level, and 15,300 the next level to keep a close eye for Nifty 50. All right, so that's my take on the index and the market. Like always, let's move ahead now and talk about the stocks that we can focus upon the coming week.